Good evening to all investors gathered here for today's event. This time we will be talking about stocks that are going to be declaring their results. And I've kept this event at this particular point of time so that as the result season kicks in, we've already seen a few companies declare their results, numbers come out. You would be in a better position to take decisions on your stocks or to look for new opportunities. Let's start off with today's event. Let's gear up for the result season. Before I move on, a disclaimer: investment in securities subject to market risk. Past performance should not be construed as a guarantee for future returns. Investments in equity and equity-related securities does involve a high degree of risk, and users should not invest unless you can afford to take the risk on your investment. What we would be covering today, the event would not be long. My goal over here is that you take some learning out of it. Okay, I won't make it too lengthy, I won't make it too complex. Very simple, I want to explain you one particular dot, okay, or the CFT score, and how you can use that to crack any particular stock's result in the season. We'd start with the basics. What is CFT? Okay, how is that particular dot actually calculated? What goes into the calculation of it? And how this current financial trend, I'll be using the word CFT or current financial trend, it just means the analysis of the result. Okay, we'll be talking about the basics to start off with. Then we would move to all the elements that go into the play while calculating it. What are the different elements across different financial statements we look at to calculate this current financial trend? Examples of real cases of how you can actually understand how the price moves along with the CFT score. Okay, at the end of the day, we're talking about having good returns. At the end of the day, we're talking about having successful stocks or escaping stocks, which could be a problem for your portfolio. So we look at some real cases, and not just real cases. You can always drop in the chat box for us to analyze it. If you have any particular stock and you want to understand its CFT, you can drop it in the chat box. Then this one particular logic I want many of the investors to understand. Okay, because when you see the CFT dot, okay, just the way it is, you might take a wrong decision because you have to understand whether it's improved or fallen. We'll be looking at this logic. It's very important. Finally, we'll be having a Q&A session. I would want the Q&A session to be a bit more lengthy rather than me, explaining a bit of a lengthy presentation. My goal over here is to keep it very short, and you can take some learning. I don't mind coming for another webinar later with a different topic, but as long as it's short and you're able to take something back home, okay, and on Monday when the market opens, you'd be in a better position to understand the result of a company. Let's get started. The first and the most important thing is the Mojo Score, as you can see on my screen. Okay, currently it's 80 at strong buy. This is just a snapshot of one of the particular stocks. And this is the holy grail. This is the final decision of the stock. Okay, this is what you should be doing with a particular stock when you look at this particular bar. Now, how is the score made? And how does these 4 different dots we keep talking about help calculate the score? Starting off with the first dot, quality. Quality is a very subjective word. Okay, when you say quality, the quality of a particular thing might be different for some person. Here we try to make this quality into an objective manner. We look at the long-term financial performance of the company, how consistent it has been. Okay, things like management factors, or how is the capital placed in the company. So quality is the gatekeeper. It's the first dot. Second, valuation. Okay, how attractive the company is at its current price. It considers fundamentals, past prices, peers. Third is what we'd be cracking today, which is the financial trend or the current financial trend score. Here we compare the result of the company in comparisons to its past and peers. Lastly, we have technicals. Okay, this was the 4th dot added a few years ago. Previously, we just had 3 dots, but technical is very important to understand how the price is moving. We look at this across 7 different indicators. To break it up and make it a bit more easy for you, the quality and valuation is something for the long term. If you're looking at the long-term horizon of a company, then you would need to look at quality and valuation. But short-term factors, okay, short-term things that move the score is financial trend and technicals. Okay, and these 2 different dots are the short-term indicators which can move the score of the stock. Today, I would just want you to focus on one thing, which is the financial trend score. Previously, we have done an event on this particular thing, a very similar presentation, but this was done quite a few years ago. That's why I'm coming back again now to give you and to just freshen up your minds as to how the CFT score is calculated. If you kind of like this event, we can talk about the quality dot, the valuation, technicals, and understand each in a bit more better manner. But currently today, I don't want you all to focus on the rest of it. We just make it easy and just focus on this one particular dot, which is the financial trend CFT score. How do we calculate the CFT score? What goes into the making of the current financial trend? The methodology we use analyzes the company's latest financial across multiple parameters, runs over 200 formulas on each set of financial results. Okay, and these particular set we're talking about is the quarterly results, profit and loss accounts, balance sheet, cash flow statements, and the shareholding pattern. The CFT runs 200 formulas looking across each of these different statements, and then finally the score is calculated. It's not just one particular score that looks at just the latest quarterly results. You have to understand that we get profit and loss half yearly, balance sheet once in a year, cash flow as well, shareholding pattern also gets updated. And all of this goes. So don't think it's just looking at the last result which comes out quarterly. It looks at all the financial statements to finally reach to a conclusion. Okay. Now I'll take it a step ahead. If you want to understand the quarterly results we talk about, okay, I've put the frequency in the bracket, which is quarterly as it goes. Profit and loss, we receive this half yearly. Here we look at these different things, but these are three of the main important things we're looking at, which is the company's top line and bottom line growing? Are the revenues growing? Is the company able to get in more or convert its orders into revenue? And finally, the efficiency, operating profit, how is it growing? Is the top line we're talking about getting converted into bottom line? How is the company handling its interest cost basis the debt it has taken? All of this is analyzed within these two different things, which is quarterly results and profit and loss. These are three simple points I'm talking about. If you go on the website, there are many more things we look at. Okay, just to make it easy as to why I have put these 2 points. This is just some of the easy things we look at. But if you look at how deep we go, you'd be shocked. Okay, after this webinar, I want you to actually go and read the financial trend of some of the companies. You will understand that it's not just these, there are a lot of other things we're looking at. The second one we talk about, the balance sheet, or the third one, which we receive annually. Here we look at things like, has the company's borrowing increased or decreased? Is there any growth in the company's assets? Okay, these are some of the factors we look at when it comes to balance sheet. This comes once a year, so this is an annual frequency. Then we also look at cash flow statement, which is once again annual. And does the cash flow support the company's profits? Is it generated by internal operations? We look at cash flow from operations over here to understand that, okay, the cash flow which has entered the company is not coming from a cash flow from financing activity or for some of the investments the company. The cash which is coming in the company is from the actual operations, the internal operations, and is organic in nature. Okay, so we look at the cash flow statement. Lastly, which is important, we look at the shareholding pattern which we receive quarterly. Is there a growth in the institutional investment, DI holdings? Okay, is there a trend? See, it's not just important that we see, okay, there is 5% FI holdings. What's more important for you is to look at, was it 10% last year and now become 5? Okay, has DIs also increased? We also look at pledged promoter holdings, but we get a lot of queries on this. Many of the investors say that, Jason, okay, this particular stock, let's say Vedanta has pledged promoter holding this stock. I don't know why you've recommended this particular stock. Please understand over here that even if the company has pledged promoter holding, it's not a negative sign altogether. It's one of the factors we look at, not the only factor we look at. I think the last event or the previous event, someone had asked that, okay, this particular stock has pledged promoter holdings. Nothing to be very concerned about. Pledged promoter holdings works as a problem if the stock's price has been moving downwards rapidly. But, to my also perspective, I see that pledged promoter holdings also say that the shareholder is very confident about his shares, which is why he's pledged it. But it goes a lot of ways. This is one of the factors. I don't want you to get confused here. Apart from that, we look at a lot of things in shareholding pattern as well, which is received quarterly. So now you can kind of get an idea that this is the different things we look at. If you want to dive in a bit more deeper, these are the different ratios and parameters we consider over 35 to 36. Net sales, the top line I was talking about, other operating income, depreciation, interest, coverage ratio, margins, which are very important, okay, to understand the efficiency, profit levels, okay, the bottom line, EPS, non-operating income, understand that is the revenue coming is from non-operating income, something that the company is not actually, catering to. It's not the company's domain, but yes, some revenue coming from some other type of activities, cash and equivalents, okay, debtors, inventory, okay, there are loans and advances we look at. Then there are other ratios as well, return on capital employed, return on equity, Debt to equity, a very important factor to understand how well the capital is placed. Turnover ratios, okay, important to understand. Dividend per share, dividend payout ratios, to understand if there is some kind of constant or an income-based return you can get from the stock. Promoter holding, FIDIs, raw material cost, employee cost. Capital adequacy ratio. Gross NPA, net NPA for banks, very important. NII, CASA, current account, savings account, very important for banks. We just don't look at these numbers, okay? We look at these numbers across different horizons. Now, please understand this one particular point. When you go on the exchange and you just download a particular company's result and you keep it in front of you, it shows you 5 different quarters. You will have to look at it a bit more in a different, using a different spectacle. You'd have to look at it, let's say 2 quarters together versus the previous 2 quarters. If you look at 5 quarters now, 5 quarters, semi-annual period. So the beauty about this is that we look at it across different horizons. Otherwise, what might happen is that you just open one of the company's results and you see, okay, quarterly results, revenue has grown by 20-30%, very good. But in the previous quarters, you see that it has been growing much faster at 60%, 70%. Is this a slowdown? Okay, so across different horizons, which is important, we look at something which is known as consistency, and that's very important. When we look at companies, we don't look at some future potential news or what might happen in the market tomorrow. You'll be looking at data. And if the company is showing consistency, we've seen such companies grow in the stock market. Consistency is important. If you're investing in a company that has, let's say, made 100 crores of net profit, then 120 crores, 140, and then suddenly 30 crores. Then again 300 crores, 400 crores, and then suddenly 20 crores. You're getting the kind of shift or the kind of volatility you'll face when you hold such a stock, which is a bit more riskier. Better than that is actually investing in a company which has 100, 150 crores, 200 crores, 250 crores. Okay, it can go back to 220, but there's some consistency and there's less volatility with regards to, how the company actually handles its operations. So consistency is another important point we look at. Seasonality is one thing we also have to see, because here you have to understand there are some particular industries which, play according to the particular season. Okay, it's not possible for some industries, let's say non-discretionary or FMCG, it can work throughout the season. But there are some particular, industries where the previous quarter, the current quarter cannot be compared to the previous quarter. It has to be compared to the previous quarter last year. So for example, if you're on March 25, you cannot look at, let's say, the December numbers. You'd have to look at March 24 numbers. Okay, so we also look at seasonality for some businesses which, have a particular season with regards to, how the numbers turn out to be. Okay, so these different ratios and these different ways of looking at it. Okay, I hope you're getting some idea about financial trend, how deep we're trying to get into it. We'll also take you on the website to show you how it's in action. But to some idea getting as to how we unfold this particular CFT score. Now, if you move on, let me explain to you how this particular data comes in the system. Now, the reason I put this slide is we get a lot of queries from investors. We used to get this all throughout the time that, the company has declared its results. Where is the CFT score? Or the company, it's come on the news and stuff. Your people might be thinking that there is someone sitting in the team over here and, reading through the results. No, that doesn't happen. There's a particular way this data which comes from the exchanges or the data providers enters the system and how fast we take to calculate it. So let me just break it down for you to get a better explanation that where the delay happens or where is the checks and balances. We first receive this raw data from providers. Now understand, I'm saying raw. There can be a lot of errors that we can receive, and there are some checks and balances at Markets Mojo to ensure that the data flows in well. Otherwise, you heard of the concept garbage in, garbage out. If any of the numbers we receive, is showing a particular error, then we might give a wrong CFT score. So after we collect the data from providers, we then have our own checks and balances. Let's say, for example, the revenue has grown by some 6,000%. Now that might be a fat finger error. Someone is typing, he's put an extra 0. Okay, or there is an error, there is something wrong in the data. So there are some checks and balances to understand whether the revenue has actually grown that level. So some companies get flagged and there is a manual check as well so that we understand, this particular company, we go and compare it on BSE and NSE. So these checks and balances are important. Then once these checks and balances are done, analyzing the data happens in less than a minute. We are very quick with this, even though there are hundreds and thousands of formulas. We are very quick with this particular part because we got everything set in place. But this is where we need to be very careful when the data comes in. As I said, garbage in, garbage out. If the data is wrong, the analysis will definitely be wrong. Okay. Then we analyze the final data. So it is a 3-step process over here. We receive it, we check it, and then we analyze it. But understand the last part, which is analysis, takes less than a minute. These 3 things work together and we finally get our CFT score. All the different ratios I was talking about, all the different elements. This goes through this process and finally the CFT score is calculated. Let's look at some real life examples now, how we use CFT score at Markets Mojo and how you could use it as an investor. Okay. Now please understand that when we exit, enter or different strategy, we just don't look at CFT score, but it's a very good cue. It's very good for you to supplement with your analysis and not just look at CFT score. Okay, I'll only invest when the CFT is good, although it's bad. No, that's not something we're asking you to do. What we're asking you to do is look at the score, but you can take a cue from CFT. Let me give you an example. This is an example of Trent Limited. Look at Tata Enterprise Company. It was part of the Mojo stock list. And now if I plot this particular chart, now if you see this chart, you have to be very quick to understand one thing. This black dot is nothing but the price. And these bars over here are nothing but the financial trend score. We entered this stock, okay, at around this particular period over here, August 23, and we exited over here. They had capped a 221% return. Now, if you take a cue from this, if you see the results over here, it was 9 over here, and then it jumped to 32, which was quite a positive quarter. Here you can see as soon as it jumped to 32, there was an increase in the price, and it kept moving up, the company kept declaring positive results. We exited somewhere over here because from 25 it dropped to 5. So at this particular period over here on 5th Feb, we took our exit. Okay, I'm not saying we exited over here. It's impossible to exit at the most top point and enter at the most, let's say, bottom point, okay, which is here. But we entered here and exited here. We took a cue from the CFT score pattern and there was some 228% returns clocked. Another example of BSE. This is entered a list on 13th November, still not exited the list. Okay, let me make it clear over here. 13 November 2023 when it entered, okay. Now, many people were saying that you should have entered over here. But okay, we entered over here a bit late. The funniest part about BSE is people exited here. People exited here. People also exited here. A lot of investors exited here. They exited here as well. They exited here. We are still holding on to it. Now, you might ask me, why are you holding on to BSE? The price has been moving in one direction. We are not looking at any level. We are not looking at any particular price. The strategy name says reliable performers. As long as these green dots or these green patterns are reliable, we will continue holding the stock. That is why we were able to clock some 206% return and it's still running. Okay, one of the stocks which has been recommended and performing very well. Here we are looking at the CFT score over here when it comes to reliable performers. It's a different strategy. But here you can please understand that these green dots is our support. Here's how we are using CFT. Now, if let's say the CFT trend is, let's say, negative, it goes to -5, we might exit the stock. Because that's our strategy. So these are how we are using the CFT score to understand whether you should take an entry or, you should be careful and take an exit now. You might think these are exceptions. You can also, after this webinar, go to any stock and look at this particular chart. I'll show you where it's available. If you look at this particular chart over here, you'll get a better understanding that there is a very strong correlation between CFT score and price. I'm not saying that as the price goes up, the CFT score moves. It's not that way. But as the CFT score improves and it continues to be on a higher level, the price does move in that pattern. Okay. These were 2 different cases. We'll also go on the website and look at other different cases. This is one important logic I want you all to understand, okay? Which is if a CFT score improves or is fallen. If I can take you on the website quickly, and let's say we go to earnings and just dive in a bit deep. We enter one of the earnings screener. Here, if you can see one simple thing, okay, this is the latest quarter. Okay, now as I'm talking 11 July, the same date, people are declaring results very quickly. You can see how quickly it's coming in the system, TCS. Okay, let's take an example of this particular stock, which is MB Agro Products. Improved versus fallen. Please understand this logic. This is the current financial trend, which is outstanding. And this is the previous score and it has improved. Now, Elecon Engineering has also got a positive result, but the arrow is downwards. And the reason for that is, even though it's positive this time, it has fallen from the last time's quarter. Here it remains the same. Okay, 3 very good examples to make you understand. So, you have to look at whether it's improved or fallen. Okay, if you want to get a better idea, now you might come to me and say, okay, Jason, this particular stock has got outstanding, it has improved. If you see the return since result is 0.35%. This particular stock got positive results, but it fell. It fell from the previous score, and that's why the stock has also fallen since its result. Amal has remained same, stock didn't move much. This stock over here, very positive and improved, stock has gone up by 4%. You're getting it? This particular thing you'll have to understand. If I have to give it to you in a bit of a textual format, a company may appear to have delivered strong performance in the latest quarter, but it's essential to compare it with the previous quarter to check if the results has deteriorated. You're getting my point? It might be good, but was it better than the last time? In other way, a company that seemed to have posted negative result, but might show improvement versus the previous quarter. So even negative versus very negative is an improvement. You're getting my point over here. I can go again. If you all have any particular queries, you can drop in the chat box. I'm trying to go slow over here. You have to remember that the market discounts what is already known. अगर मालूम है कि वो particular stock, let's say that stock or that particular company has some news before the result. Let's say it's an export company and there is a Trump tariff, the tariff is in play, the company hasn't been able to get good revenues and the profits were low. When the result comes out, you might think that the stock will fall down. No, people already discount all of this in the market. Market discounts already which is known. But there are something which are surprises, which go ahead of expectations. Stock prices reflect expectations that are already built in. It's the surprise element that, okay, we didn't expect this in the result. We didn't expect this in the financial trend. We didn't expect this in this time result. That moves the stock after the results. Okay, so it's that improved factor or the fallen factor, or it's just that surprise element. Many times, we see that the company has declared good results, so why is it going down? The reason is because it did not declare as per the expectations of the investors. You might think that, okay, let's say for example, an export company. Let's take a very simple example. There were some tariffs that were implemented, and because there were tariffs, the company, sales was about to be low, and it was going to have a problem, whatever it is. But when the result comes, it was not that low. It was somewhere at par versus last quarter. The stock will shoot up because it was a surprise element in the financial trend. It was a surprise element that people did not expect. If you don't understand this logic, all of what I previously explained would actually go in waste. You have to understand not just, okay, very positive result. Last time was outstanding, it has fallen down. Company might take a hit. Okay, very positive result, last time was negative. Oh, it went up, company should move ahead. You have to understand this logic. You can watch it slower. You can go back on the website and understand it. Because if you understand just the thing in one particular way and you don't understand how things move, you probably will take a wrong decision. So this is a very important slide for you to understand. Don't worry, we'll be going on the website. You can ask queries and then we can, dive a bit more deeper on this. I'll give another example of Hindalco. Very positive results in this quarter. Very positive. Improved. Because previous score was 11, this time CFT score is 23. Adani Energy Solutions, very positive results. But last time it was 24. This time it is 23. Okay, this is not the score of the stock. This is the CFT score, which we've been talking about now. Don't get confused between this and the final score on the stock. I can take you to the result corner section. We look at these 4 different things to understand. Okay, you can look at quarterly snapshot, sectoral performance, result analysis of June 25, and top results across the market. Okay, I'm going to take you to the earnings section over here. If you go to markets and earnings, let me just break down the section for you so it's a bit easy to understand. We are just into June 25, hardly any few stocks declaring results. Okay, you see last time in September we had 633 stocks declare positive result. Positive. Then December was 41%, then 44. The trend has overall been downwards. This time it's 29, but you'll have to have a better look. You can see over here this quarter, how are the different market caps performing. Very important. This is the overview. If you scroll down, the second part is sectoral analysis. We have very few results. Next time when I come in front of you and we do, a different webinar, this page would be filled a bit more. But this is just to give you a preview. You can get this under markets and earnings. sectors with good stocks. Okay, positive, negative. Result analysis. My stocks. Okay, one of my stock, for example, TCS, has declared results. 22 stocks have declared results for June 25. I don't know if you all are aware. It started from yesterday, 10 July. One stock has declared outstanding results for June 25. One stock, GMC Tech. Outstanding results, okay, 3.45% up. I don't go and buy this stock tomorrow. Please understand it's a micro cap. It's 0.90 rupees. Okay, 1 year it has been lower. Please don't just jump. See the word outstanding. The score over here is currently hold. So don't make a rushy decision over here. Top results of large cap, mid cap, we have Anand Rathi Wealth, which has declared results. If you understand the results of Anand Rathi Wealth, oh, it's up by 4% today. I don't know what time the result came. Was it during the market hours? You can click on recommendation. As I said, this is the score. And this last thing over here, financial trend is what we are talking about. 13 positive. Okay, this is the price and this is the financial trend. Net sales has gone up. Operating profit has done well. Going back to the earnings section, this is top result, mid cap, small cap, top results of micro cap, upcoming results. आज किसका result है? Aditya Birla Money will step in. Okay, so you can also go inside, click on any of these buttons and read further. For example, upcoming results. Right, upcoming results. Yeah, Avenue Supermarts today, big company. Superhouse. Now you might be thinking, yeah, these companies are declaring results. What should I do? Should I get excited? Should I actually just keep staring at the screen? One strategy which you can kind of use, which is the reason I'm taking you inside this particular screen, which I kind of also use and many people also use it. You should take a cue of sectors from this particular section. What I mean by that is, let's say you hold a stock from the rubber industry. You might be a bit anxious when the result is about to come. But if you're lucky enough that there are a few other companies in the rubber industry that are declaring results, you can take a cue from that. What I mean by that is, let's say all the rubber companies you can see over here are declaring positive results. It can be possible that the next one or your stock also declares a positive result. Now we had TCS declaring a positive result. Even though it went down, it was not a very high score. We have HCL Tech coming with their results in 3 days on Monday. Right? We also have a few other companies from the IT software. There's one in IT hardware, but we have Tata Technologies declaring results in 3 days. We have Just Dial declaring results in 3 days. You can take a cue from all IT companies and then understand, okay, how is the sector going to move ahead? Now, please take this with a pinch of salt. Understand that just because 5 IT companies have declared good results doesn't mean the 6th one will necessarily declare. Okay, so you have to get a better understanding about that. This was the result corner section. What we do now is, before I move on to the Q&A session, just because you attended this webinar, our 1-year pricing on website is at 14,999. We're giving you 1 year free for the user attending the webinar, plus 6 months free for a limited period. Okay, it's a total of 15,000 for 30 months, as low as I think 500 rupees per month. It's the best price you can get. Okay, prices would be increasing, and for all the value we'll be giving you over the next 30 months, this is a steal. These offers won't be available later. The link is available just below the video. With that, I will start with the Q&A session. Please drop in any queries you have. It might be CFT related, not CFT related. Any other suggestions you have, and then we can dive in a bit more deeper. I'll get your perspective if you drop in more questions. What is the maximum CFT score? This one by Mr. M. Putamkar, and what makes the company results as outstanding? To my best of the knowledge, I think it's at around 40, capped at 40, 45. We don't have companies going above that. That's the maximum limit. And outstanding is about 30. So if a company has a score above 30, it would be counted as outstanding. If the company would get outstanding results back to back, it is very positive. Okay, so you can, if you want to also understand, if you can just go to the screener section, just give me a minute. And here, if you go to financial trend and select latest quarter as outstanding, you can always select it over here to get a better idea. Let's say we only select outstanding. Okay, you can always go here, run the analysis for outstanding. Here, if I sort down on outstanding, okay, it's going above 40, so it's around 50. But above 30 was right. Above 30 is where it starts, and I think around 47 to 50 is where it's capped. Okay, here you can see all the outstanding results of the last quarter, which was previous to that March quarter. Okay, let's move to Rajkumar's question. Dear sir, good evening. Would it be okay for Mojo to raise red flags about stocks which have zero promoter stake, zero institutional participation, zero participation of reputed investors, that is 100% individual institutional investors, and such stocks are always stuck in upper or lower circuit. See, when a stock enters the Mojo stock list, it goes through a lot of criteria, checks and balances. We already look at a lot of these things. But I'll tell you one particular thing, just because it has zero promoter stake or zero institutional participation does not make it a bad stock. See, these are good indicators to look at, but these should not be your final indicators to look at. Let's say you invest in a stock, okay, very, very raw example just to get your understanding. You invest in a small cap, which has zero institutional holding, zero mutual fund holding, which just with promoters and individual investors like me and you. The company starts declaring good results, okay, and it starts showing good signs of improvement, and it's declaring consistently good results. We suggest you to enter that stock. Now you might think, okay, it does not have institutional investors. What might happen? The company keeps doing well, then the institutional investors come in the play. And you know, when they start investing, how fast the stock price moves up. It becomes small to mid cap to large cap. Now, are you telling me that we should enter when it becomes a large cap and a lot of institutional investors? No. So we look at institutional investing, but that's not the only thing we look at before reaching to a final decision. If you're going to look at only these 3 to 4 things, you might lose in catching multi-baggers. You might catch some of the large cap stock, mega cap stocks. Let's say HDFC Bank has done well over the last 3-5 months. But if you're looking at more returns from stocks which are not discovered, that's where Markets Mojo might come into play for you. Okay, then let's move on to the next investor's question, which is Varun Beverages Limited. Could you please analyze the CFT? Definitely. It's at hold currently, which is the score, but I'll dive into the CFT. I go to recommendation, click on financial trend. Okay. Now, if you see over here, it started with a negative 15 5 years ago. And this was also a period when we were investing in the stock, if I'm not mistaken. I think it was part of stock of the month or something. We had invested in this particular stock. Let me just get a better example. Closed calls, most probably, Varun Beverages, right? Yeah, if you could just show my screen, Amir. Varun Beverages was the stock of the month. We entered on 8th October. We exited on 7th October 2024. 3 years. It was 355% return. You can understand the scale of the return it made in those 3 years period. Now going back to the CFT score. Okay, we just entered on 21 to 24. I'm just trying to understand. So we entered somewhere here as well. And this was the CFT score when the company started doing well. And it went up, it went up, it went up, it went up. It went up, it went up, it went up, it went up till here. This was the period we exited, because here you can understand that even though the score was positive, now you might tell me over here, okay, why has the stock price not gone upwards year and further up? Please understand, I spoke about improved versus fallen. The CFT score is positive, but it is falling, sir. Which is why the price also slowed down. Now, should you be worried? Here you can see that from 6 it has become 13. If it continuously goes up, then you can kind of, exit that, keep holding that stock or enter that stock. So give it some time now. You can see the whole graph is green. But I'm not asking you to just look at the color. I'm asking you to look at whether it is improved or fallen. Here there has been a trend of it falling. And as soon as the trend started falling down, you can see from 361, the price also started plateauing. Then it fell finally. Now it's also somewhere over here. We have to kind of understand the overall. You can see over here net sales as well. It is positive, but it has slowed down. Profit of tax also has shown some slowdown. Okay, so this was the CFT of Varun Beverages Limited. Okay, I'll move on to some of the next questions. If you just give me a second, it's loading. This question by Narendra. BSE appears to be overvalued as per some brokers, but Mojo are recommending buy. So, what would be the exit strategy as per markets within such stocks which are overvalued? They tend to correct a lot and we face a lot of drawdowns. Can you please advise how to handle such drawdowns? Definitely. See, BSE has been under the light because of the recent, the Jane Street and the allegations coming in, and it's moving downwards also because it has moved up quite fast in the recent period. There's nothing to be primarily worried about here. I'll tell you why Mojo is kind of still in the stock. We talk about numbers. Now, yes, the company has moved to a very expensive valuation, but we have seen that if the company is in an expensive valuation, but it continues to declare good results, it keeps moving upwards. Now, if you share my screen, the profit before tax is at 540 crore. It has improved. Profit after tax is at 493 crore. Net sales has also moved up. Top line. Operating profit is moving up. Margins have improved. Okay. Earnings per share at its highest. Non-operating income is something which is high. But there are many green factors, and why should we exit a particular stock? Okay, just because some brokers are given overvaluation. They had also said that it was overvalued at this level. Also at this level, they said that it's overvalued. Has it stopped? No, it's still moving up. When this fundamental starts showing some signs of deterioration, we will look at the real numbers and we will tell you, okay, exit BSE. Now, please understand that you're saying that it can be maximum drawdown. If you're only investing in BSE, then it will be a problem. Okay, we have clearly mentioned that it's a very high risk, high return stock also. It has high risk. Okay, so here you have to understand that if you look at it in a 1 year period, okay, BSE is here. So this is the high risk. Look, it's saying low risk and high return, so it's something good because the volatility has been lower. Okay, but still it's a very fast moving company. You have to understand over here that you would have drawdowns, you would have to face drawdowns over here if you're holding only that's one particular stock. But if you're having a portfolio of stocks and let's say you have 6 to 7 to 8 different stocks, then it would be a bit more easier for you. If you're just holding on to BSE and facing the music, then it would actually move up or move down very fast. Other brokers might have given a very expensive valuation over here. We're just looking at the next fundamentals. This time it would be declaring its results and you will get a better idea as to whether we should exit BSE or whether we should continue to remain invested in that. Venu, you asked this question, which filter shall be used to find out any stock entering breakout area after consolidation? Similarly, to find when to exit on technical basis. When it comes to breakouts and technical patterns, we just have indicators. We don't actually go about giving you a signal that it would be consolidating or breaking out from this level. We look at more of the fundamental side. Technicals is used as an indicator to understand price movement, weekly, monthly levels. There's no particular way to understand this on the website. It can be a good suggestion. We can look at adding something like this. Find out when to exit. We look at 4 different dots. So we have more of an investing approach. Just because the technical is showing a bearish or a mildly bearish pattern or just turning sideways, we won't go ahead and tell you, okay, you can exit the stock. Okay. RB has given a question. Are there any examples of companies who have earned a high CFT score in the quarter, but yet the price of the share has fallen? It can be possible. And I'll give you a classical example is when the CFT score is very high for the quarter, but the management is not giving a good guidance ahead. Okay, let's say this particular quarter, the net profits have been extremely up. Sales have done well. The company has done extremely good with its margins. But then the management comes up and says that, we might not expect to do well in the next few seasons. What is the use? Okay, it might actually fall down much faster. So there is that one particular case, which is a bit, I would say, coming from the management side. Even though the company's results are extremely good, they've not given a good guidance. That is where it might be problematic. It's good to listen to the calls and the final con call and the guidance given by the management, read the notes as well sometimes. Because even though, many times IT companies do this, they have very good results and then the management comes up and says, we won't be expecting a lot of orders to be flowing in. There is one particular case where this happens. Okay, I think I've kind of covered most of the questions. I'm just waiting if there's anything else. This one by Shyam. I have a couple of queries regarding long-term investing. As long-term investor, if a fundamentally strong stock becomes overvalued, is it advisable to book profits? In case an excellent quality company posts weak results for a quarter or more. Actually, I'll pick up one question at a time. If a fundamentally strong stock becomes overvalued, is it advisable to book profits? I wouldn't look at the stock's price as it being overvalued. I would start looking at that, okay, it's turned into a premium level now. Avenue Supermarts, for an example. Look at the price where it is today. The company expands, the company demands that premium. So that's why it's at that level. So even though it's overvalued, I as a long-term investor don't look at valuation at that close or a magnifying level. For the main fact that it is overvalued because the market loves it. It is overvalued because it trades at that premium. Now, if it is overvalued and the fundamentals are not good, let's say a company which has no name is not doing that well, and then it is still overvalued, then I would exit. But if it is overvalued or it's at a premium level, and the company is doing well. Example BSE. We didn't exit. It was reaching to a very expensive valuation. Company is still doing well. You can continue to be remaining in that stock. In an excellent quality company, post weak results for a quarter or more, what would be the ideal approach? Stay invested and more, add more, or reassess? See, good question. If an excellent quality comes with the word that the company previously has declared consistent and has been very good with its results. It can be a one-off situation. So you might not necessarily exit that stock. That stock might hit. That stock might start moving downwards. But if it bounces back, if the management also comes out and says that, or it's explained in the results that this happened this time because of a sale of a division or whatever it is, then it is possible for you to continue remaining. But if an excellent quality company declares very poor results, you simply exiting the stock wouldn't be a good decision from a long-term perspective. There are cases. There are many stocks that have declared results good and consistently, and then one bad quarter doesn't define your long-term investment journey. If it's an excellent quality, then you should consider remaining invested. Okay, and I think the last part of it was if you are booking profits, then how to catch multi-baggers. You will find a multi-bagger in your portfolio. It's not possible to identify a multi-bagger before it becomes one. Booking profits is a good exercise. Normally people average the stock downwards. If a stock is going upwards, I'm someone who kind of adds more. Okay, but when it comes to booking profits over here, it's a good exercise because it's very good to book profits in such a market when it's very volatile. You don't get the chance, so you book profits. But you don't need to completely exit the stock as well. See, multi-baggers will be made. It does not mean a pure exit. Booking profits at a good level is a good exercise. And you would identify a multi-bagger in your portfolio the way it moves up. Out of every 10 stocks you invest in, even if you get one multi-bagger, you're successful. People get this after every 20, 30 stocks. In 10 stocks, if you get one multi-bagger, it will make up for all your profits. Because, depending if you are invested enough in that particular stock. Okay, I'll just pick this next question by RB. Marcus Mojo is an AI-based IP and a wonderful product, no doubt, because of the plethora of information available to us at the touch of a button. One thought that I am trying to grip with is how in the earlier times when technology was not so advanced, we had stalwarts who made so much wealth like Jhunjhunwala and Damani. I mean, yeah, and now the research is available to everyone. Not just Marcus Mojo, a lot of different websites have really helped retail investors in specific to kind of understand information. I don't know if you remember the times when, even I was not there in that time, but there were times when it wasn't, people used to just buy stocks without knowing the company, what the company used to do. Less information available. How koi company hai, wo FMCG or koi particular firm. You don't have that information. Here you can actually go from the top to the bottom of the stock and grab all the information. So we are living in a very good time. That's why the markets are very fast to react. People are a bit more equipped and we are hoping that this becomes much more better. With Markets Mojo, will definitely help you if you have any particular queries on trying to understand it a bit more better. But we are living in a better time now because we have much more information and technology at the the click of a button. Okay, thanks a lot, Mr. Frank. I know you've given a lot of good words over here. You really liked the webinar, and I'm happy you could learn a lot. You always put a lot of nice remarks for me. I think we've covered up most of the questions, and I hope today's webinar was informative. This is the reason I kept it for 30 minutes and a longer Q&A of around 15 minutes. This is the reason because you all might have a lot of doubts. And I hope you understood CFT to some extent today. It is a confusing thing, not confusing, it is a bit of a lengthy dot to understand. It's not something you can understand in 45 minutes. It goes with practice, it goes with reading a lot of reports, looking at a lot of results. So if you're really interested and you really want to make money and kind of understand how this works, this particular CFT score will definitely help you. Amir, I would request if you could keep this recording available tomorrow, if you could annotate it, and always available for the investors. Get back to it, result season keeps coming in. Get back to this video, understand what I was talking about. Use it in your investing journey, and definitely with this kind of approach, you should learn a lot more about the stock market. Thanks a lot everyone for attending today's event. Happy weekend. I wouldn't want to take more of your time. Looking forward to seeing you all come for the events on Monday and future as well. Goodbye and have a great weekend. Thank you so much.